Good morning, friends. Okay, so today we are starting with your AFM revision. What we are going to do is you can call it as AFM revision, you can call it as AFM fast track, you can call it as practice batch, you can call it as exam oriented batch. The focus is more on the exam side with concept clarity. Obviously, the clarity on concepts will be there, but the focus is more on the concept clarity side and ensuring that you clear your exams. Little bit of practical items which I normally discuss in a regular video or a regular batch, those discussions I will normally avoid it, and my focus would be more on ensuring that you get above 60 in your exam. So that would be the clear focus with which we are going to take these classes. In these classes, in 12 days we are going to cover almost all the chapters, and there will be extensive coverage, around 300 plus questions we will do, so that will ensure that you get the needed clarity to face your exams. As I do, I'll first discuss what is the strategy which we normally follow for the subject. I'm not going to explain what is there in the subject, all that I don't want to do. I'll directly get into the subject level discussion. So first thing I want to tell you is your paper pattern, which I think most of you are aware. There's a 30 mark MCQ, which is case scenario based. There will be 15 into 2 there, and there's a second part which is the descriptive area, which would come for 70 marks in exam. Now the descriptive area will have a combination of practical questions, and it will also have your theory oriented area. So 30 marks MCQ, mostly practical question. Very rarely a theory oriented question can come. 70 marks descriptive, one mandatory question of 14 marks, and then 4 out of 5. 4 out of 5 needs to be done, which will carry around 14 marks each and put together your 70 marks. In this, first thing is theory preparation, which student coolly ignores it. They feel theory is something they should not prepare. Very easily you end up ignoring theory, and you feel that you'll be able to score easily marks in the balance 80 marks. That is the attitude of most of the students. They feel, why should I prepare for theory? I am not going to prepare for theory. Let the faculty tell anything, let ICI tell anything. My job is not to prepare for theory. That's a usual mindset of most of the students. Some of you would have written exams till now. That is the mindset with which many students go. Now theory can become a make or break for you, because theory anyway mandatory you will attend for around 10 to 14 marks in paper. Rare scenario you may end up answering even 20 marks of theory. That's a rare scenario, but you may end up answering even 20 marks of theory. What students do, they feel theory is something doesn't deserve their attention, they don't prepare. No, theory needs your preparation. Theory is something you cannot ignore it. In our concept book, I have given summary theory, which is page 218 to 251. There summary theory is covered. No need to open the concept book now. There summary theory is covered. That you can do. What you can do is detailed theory. Chapter 1, 2, 4, 7 and 15. Chapter 1 is your intro chapter. Then there is a chapter on your risk management. There's a chapter on security analysis. There's a chapter on securitization, and there's a chapter on startup finance. These 5 chapters, extensive theory preparation is needed. How will you do extensive theory preparation? My theory videos are uploaded in YouTube. I've uploaded for 13 chapters. In that 1, 2, 4, 7, 15 is obviously covered. You need to go through them at 1.5x speed, 2x speed, 1.7 speed, whatever speed you want to go through. First go through them. After you have gone through them, start preparing with my theory material or the summary theory material, your wish. Summary theory can also be done, normal theory material can also be done. Normal theory material will cover it extensively. Summary theory material is going to cover in a short form. It's kind of revision. You are going to revise what you have learnt. But for that, first thing is you have to learn. What students think is, I will get into the revision stage. Revision is the second stage. First you have to learn. And for learning, you have to go through chapter 1, chapter 2, 4, 7 and 15 in an extensive manner, exhaustive manner. No compromise on 1, 2, 4, 7 and 15. It will be a make or break for you. Again, I'm repeating, it is going to be a make or break as far as AFM subject is concerned, or be it any other subject where there is a theory weightage little bit. Because audit, you prepare theory. Law, you will prepare theory. But subject like AFM, you don't like theory because you feel, why should I prepare theory? It's a practical paper. It is practical, but still the 20 marks can make or break the scenario. Second thing, if you are well prepared for the 20, I have looked at many papers which are evaluated and given to me. 30 marks MCQ, student is scoring 28, but the descriptive part they are scoring only 10 marks, 12 marks out of the 70 itself. Only 10, 12, 14, 16, 18, 20. A person who is able to crack MCQ, which means he has the clarity on the concept. The clarity on the concept is there. That is why he is able to crack the MCQ. In fact, MCQ is the best way of testing the clarity of the student. And if a student scores more marks in MCQ, it means that guy has a lot of clarity in the subject. But the same student in the descriptive is not able to score marks because presentation issues, because some are there, some mistake you do. And the third is which is not in your control, ICI mistakes. They set a mistake in the paper, they evaluate it wrongly. All these are not in our control. Because many a times a suggested answers come, a student sends me a message that ICI did not award me marks here. What can I do? I also can't do anything. You also can't do anything because we are at the mercy of ICI. Let me be very, very clear. That is for 10 mark of your paper. Now, 10 marks of paper, you are cribbing about only the 10 marks of it. I understand. There are students who have secured 58. If that extra 2 marks they had awarded, it would have become a 60 for them. It would have been an exemption. That paper they did not prepare. In the total, in 3 subjects, they have scored 148. This 2 mark could have made all the difference. I empathize with you, but certain things are beyond our control. So that 10 mark of the paper is beyond your control. Earlier, it used to be out of 100, 20 marks of the paper was beyond our control because somewhere or other they'll set up mistakes. MCQ also, I've seen paper where they set up mistake, but at least they award marks. They end up awarding marks in MCQ. But descriptive, they expect something. In the recent attempt, one place they did not give the discount rate. One place they made some other mistake. So all these will keep happening beyond your control, beyond my control. Don't worry about the 10, 15 marks of the paper because student worries only on why ICI is not perfect. Let's leave it. Let us be perfect. We be perfect in the 85 marks of the paper. Balance is automatically taken care of. You take care of the 85 mark of the paper. You are only worried about the 10, 15 marks of the paper, which ICI does mistakes. I'm making it again very, very clear. ICI paper. In fact, I keep telling all this. In the current batch, I had set one test for my students and I myself made a mistake in drafting the question. So I keep cribbing about ICI mistakes, but when I drafted the paper, then students said, sir, you did not give these requirements. So it can happen, human element, but obviously in a bigger exam like this, you don't want those mistakes to happen. Despite all this, I have seen papers with mistakes. I've seen papers with mistakes, papers with illogical answers, papers with illogical suggested answers. All this have happened in exam. That is not for entire 100 marks. That is for 10 or maybe a 15 mark paper. And for that also ICI does give some grace marks. It's not that they are not awarding grace marks. Some grace marks are awarded. So now why I'm talking about this is because in that 70 mark, 10, 15 is not in your hand. And even what is in your hand, you are not able to secure marks because some mistakes are here and there you make. So 30 marks, let's score in MCQ. Let's score the 10, 15 marks of the theory as well. And then balance, obviously, if you are doing it fully right, you will get marks so that we move towards that 60s. We move towards that 60. Objective is not 40. I'm not taking this class for ensuring 40 marks in your exam. If that is the mindset with which you come, then this is not the right class for you. The objective is to secure more than 60. To secure more than 60, first class itself, I'm telling you, theory preparation is mandatory. You could be expert in practical problem. I'm also expert in practical problem, but that does not mean I can ignore theory because every question has a theory component. Every question has a theory component. And sometimes when things are not working well on the practical component, maybe theory comes to your rescue and somewhere we manage it. I'll have to hedge my risk. We learn about hedging in the subject. So I have to hedge my risk. So somewhere I'm hedging my risk by preparing theory. So clear, theory preparation is mandatory, mandatory, mandatory. I'm making it very, very clear. You ignore theory, that is a recipe for disaster in exam. That will unnecessarily complicate scenario for you. You will not secure good marks in the subject if you are ignoring theory. Am I going to discuss theory in this classes? No. I have my YouTube video. Theory, there's no point in adding any value at this point of time. I've told you what is the pattern in which you will prepare the theory. All that is told to you. Your job is just to go through the theory part in a regular basis. Theory videos are uploaded. Theory videos are uploaded. Just go through the theory video and along with that summary theory which is there in the concept book. Clear? This is the first part. 1, 2, 4, 7 and 15. could have 75 to 80 percentage of the theory marks in exam. But ICI wants to surprise you. They can end up surprising in any manner they want. But normally 16 marks theory will come. 12 marks could be from these 5 chapters. Sometimes they want to surprise, only 4 marks can come, 8 marks can come. But mostly these are the 5 important chapters for theory. Now I get into the practical part. In practical part, we technically have multiple chapters. First chapter is mutual fund for me. This is broad order I will normally follow, but I may change the order. Okay, mutual funds, mergers and acquisition and valuation is a single chapter. When I did my SFM, that time there was a single chapter called mergers, acquisition, valuation put together. ICI has divided it into two. So that is the second chapter. We have mergers and valuation put together. The third chapter is derivatives and IRRM put together. Both are derivatives. It's a single chapter only. It is not two separate chapters. Derivatives is one chapter. IRRM is another chapter, interest rate risk management, but technically it is a single chapter for my discussion. Forex, again, you have two chapters, but it is a single chapter for discussion. One is your normal Forex. Second is your international financial management, something on capital budgeting. So four main chapters. Apart from that, portfolio is there, and I think capital budgeting is there. This is what is broadly the, and security valuation, broadly the 7 chapters I can say, which is in ICA material maybe 9 chapters, and small chapters are there like risk management or security analysis. All those are smaller chapter, may not need that much of our attention. Clear? So I've set the context as to what we are going to do. We are going to start with mutual funds. I'm going to directly start with the classes. I just wanted to spend 5 minutes. I have spent 10 minutes. I wanted to spend only 5 minutes to explain what we are going to do for theory, and again want to strengthen the point that theory needs attention from your side. Theory does need attention from your side. Many students feel theory can be ignored. Unfortunately, if you do that, ICI will not award an exemption to you. When I say award, not an award, an exemption, you will find it difficult to score exemption in the paper. Then you may say, no, I don't want exemption. I'm okay with 50. You attempt 50, ICI will give 30. You attempt 50, that is what is going to happen. So if you feel, no, I can score easily 50 marks, what will happen in the papers, you very well know. And some of you would have written 1 or 2 exams by now. All that does not really matter. Our focus is ensuring that we cover it in an exhaustive manner. And to cover it in an exhaustive manner, first thing is theory preparation. Clear? Now I get into mutual funds. Now I have 3 books for you. If you have bought my edition, there will be 3 books. One is a theory book, second is a concept book, third is a question bank. In the question bank, I have lot of questions. In my revision, I will be focusing on 2 types of question. One is your all study mat question. Second, there will be something called as concept revision marked against every question. Every question, few question, concept revision word will be there. I focus on those questions. This itself will take away the number to 350, 400. This itself will take away the number. Apart from this, there are certain past MTP, RTP questions are there. Time permits, we will discuss it. Time does not permit, I may not discuss those questions because my focus will be, unfortunately, ICI keeps repeating the same study mat question. So my focus will be on study mat along with those concept revision question. Some of you could be having addition to material. When I discuss a question, in the side there will be a number. Every question will have a number. That is the second edition question number. So in the screen you will see the second edition question number as well as the first edition question number. That is third edition, not first edition. So for example, as I go to the later question, you will see numbers changing. This is question 9 in my book, but in the earlier edition it was question 10. So you will see that number. You can just, if you are having addition to material, you can just move to question 10. I'll be saying I move to question 9, but you will be moving to question 10 if you have the second edition of the material. That mapping I've already shared it in the group, and anyway I have marked it here. If you have already marked in your book, it's okay. Otherwise, you can keep referring in the screen itself. It will be visible what question number it is. In the concept book, I have not done any renumbering. The concepts remain the same. Some changes here and there I have done. This is just to explain if somebody is doing edition 2 versus edition 3. Just a small discussion. I will be extensively using something called as charts, which I have released it yesterday only or day before yesterday. These charts would be really discussed extensively in the class. You may not have the charts in front of you now. Some of you could have taken print, some of you may not have taken print. Doesn't really matter. Focus will be, I will discuss the charts. You will only look at the screen, and along with the charts is what we are going to discuss the concept. So first I'll discuss the chart. Then I discussed in the concept book with a MCQ example. Then if needed on that concept, we will do problems. Some problems we will do it together. Some problems you'll only be in listen mode. If it takes a lot of time, I will not allow you to do it, because your focus will only be noting down numbers. I don't want that focused for you. I want that focus only in listening to me. That does not mean, the unfortunate thing, students feel just because I've given this instruction does not mean you will only be sitting coolly, because many students in the class, they say this guy has given me answers, this guy is explaining me everything, this guy is giving me video, I will not note down, I am not going to write your exam. You are only going to write your exam, and when you write your exam, you need that writing practice. And some students coolly feel that they will not write, let the faculty tell anything, we are not going to write, not needed. I may not ask you anything, you sit in the first row and don't write it. I am not going to, because I keep telling this in every batch. It is a voluntary decision of yours to select the course, voluntary decision of yours to come to the classes, and voluntarily you have to only clear it. Nobody is going to force. Motivation has to come from in-house. Nobody can motivate you and say that, sir, why are you not motivating us? I can tell you anything I want to, but motivation has to be internal. So your job is to note down. When I say solve it, it means you have to solve the question along with me. Sometimes I'll tell you to solve on your own. You have to solve it. Take it like an exam and then keep solving it. Take it like an exam and then you will solve it. Clear? I've set the context. Now I'm going to move to the first chapter, which is mutual funds. Let's start now. Okay, first I discuss with my charts. Chapter 8, mutual funds. Let's first understand what is mutual fund. A mutual fund is nothing but a financial doctor for managing investor money. When there is a health issue, I go to a doctor, he takes care of my health. Similarly, when I have wealth, I want somebody to take care of my wealth. One person who can take care of your wealth is a mutual fund manager. The MF manager can take care of your wealth. You give your wealth to him and he does investment on your behalf in multiple places. He pools money of so many people. So all of you together give me money. We form a mutual fund called AFM March 2025 mutual fund. I form this mutual fund today and I make investments. I am your portfolio manager. I make investments. I earn returns. You enjoy it. I don't earn returns. You pay the price for it. So I am the guy who is going to manage your money. That is what mutual fund is all about. There are multiple people in a mutual fund. There's a sponsor. A sponsor is an entity who establishes the mutual fund. ICICI MF is started by ICICI Bank. ICICI Bank is the sponsor. There's a trustee, because I take so many people money. You want confidence that I am taking care of your money in the right manner. I am not playing around with your money. I am not wasting your money. So trustee will oversee whether I am working properly or not. AMC is the fund which manages the investments. I will be an employee of the AMC. I'll be an employee of the AMC and my designation will be portfolio manager. And AMC incurs rent expense, incurs my salary expense, incurs lot of other expenses. Who will pay for all that? You have to pay, because I manage your money, and that is recovered as an example called expense ratio, which will be useful when I solve the problem. Expense ratio. So I take care of your money and you have to pay me. You have to pay me for that. That is technically called as expense ratio. And who are the investors? All you guys are investors, are unit holders of the mutual fund. This is what MF is all about. Clear? Simple meaning of an MF. I take all your money and invest it. I am the fund manager. Bharadwaj Institute, I am an employee of Bharadwaj Institute. So Bharadwaj Institute is the AMC, and Bharadwaj Institute incurs a lot of expenses. You have to pay for all those expenses. You have to pay for all those expenses, and I'll recover it from the money you gave me. You gave me 1 lakh rupee. I will recover 1,000 as my expenses. That's technically called expense ratio. Now, first concept we are going to learn is MF return versus the individual return. Now, what is MF return versus the individual return is, you are a smart investor. You are saying, I will invest on my own and earn 20% return. Earn 20% return. You are a smart investor. You are ready to earn 20% by doing investments on your own. Now, when you give money to me, I have to earn 21 or 22. Why 21 or 22? Because my expenses are there, so that I give you 20%. You on your own can earn 20%. When you give money to me, I have to earn 21, 22, so that I give you 20%. So that I give you 20%. For this, there is a formula which is there. Two scenarios are there. One is called with opportunity cost. Second scenario is called without opportunity cost. Without opportunity cost, formula will not work. What will work, we'll see. What is with opportunity cost? MF return is equal to individual return, which is 20 in my example. You can earn 20 on your own, divided by 1 minus initial expense ratio. What is initial expense ratios? When I started the fund, you gave me 100 rupees, but I received only 98. I received only 98. 2 rupees went as flotation cost, underwriting commission, all those expenses which you normally incur. So 1 minus 0.02. 1 minus 0.02. Why am I subtracting? Because now I have to earn 20 on 98 rupees. I have to earn 20 on 98 rupees. So percentage will be more than 20. So in the calculator, do 20 divided by 0.98. 20.41. So first I cannot earn 20%. I have to earn 20.41% because you gave me money. You are thinking you gave me 100. I also agree to you, but I got only 98. I got only 98 because of the initial expense. So 20 divided by 98 plus I incur every year some expense, that also I have to earn and then give you 20%. So that is another 2%, another 2%. So for you to get 20%, I have to earn 22.41. I have to earn 22.41. Any doubts on this? Any doubts on the concept here? Okay, Mr. X can earn a return of 12% on own. This is concept book. You want, you open it, refer the screen. Wherever you want, you open the book, otherwise refer the screen. Mr. X can earn return of 12% on own. Initial expense ratios 5%, annual expense ratios 2%. How much should the MF earn to give the investor 12%? How much should the MF earn to give the investor 12%? Right. MF return is equal to MF return is equal to own return divided by 1 minus initial expense ratio. Own return divided by 1 minus initial expense ratio plus annual expense ratio. Plus annual expense ratio. 1 minus initial expense ratio plus annual expense ratio. Annual expense ratio. Own return is how much here? 12. Initial expense ratio 1 minus 0.05. 12 also please write it as 0.12. Percentage, you will make a mistake otherwise. 0.12. Write it as 0.12. In the end, I'll convert. 0.12. What is the annual expense ratio? 0.02. Clear? Done. With this, my question bank question number 1 is done. You want, you do that as practice question. Question number 1 of the question bank, you want, you practice it. You don't want, don't practice it. That's your wish. The same question only. It's the same question. I have done it here. Any doubts on this? Okay. Then comes MF return versus individual return opportunity cost. What is opportunity cost? Is you can do investment on your own and earn 14%. MF is saying I can earn only 12% for you. What is 12%? After all expenses. After all expenses, I will give you only 12%. Now you are adamant saying that I want to do only own investment because 14%. But one thing is, if I do own investment, I cannot take this batch of classes. If I don't take this batch of classes, I lose an income of 5 lakh rupees. Let's take an example. I lose an income of 5 lakh rupees. So what is opportunity cost is when you do investment on your own, there is an extra cost which you incur. What is the extra cost? Time. Your time has a value attached to it. Your time has a value attached to it. In that scenario, formula and all will not work. Then what should I do? I should do cost benefit analysis. How to do cost benefit analysis? Let's see in example 2. Mr. X can earn 15% on own. Mr. X can earn 15% on own. MF will give him a return of 13%. I got irritated now. MF is giving only 13% and I can earn how much? 15%. So I got excited saying that I will do only own investment. 2 lakh rupees extra I earn. So I got very excited and said 2% extra I earn. Let me do my own investment. Mr. X portfolio value is 100 lakh. 100 lakh portfolio value means extra 2% is extra 2 lakh rupees. Extra 2% is extra 2 lakh rupees. Why should I miss out on this 2 lakh rupee? Next line. Mr. X is a chartered accountant, currently earning professional income of 45 lakh. Professional income of 45 lakh. Mr. X is spending 10% of time in managing his portfolio. 10% of time in managing his portfolio. If he spends this time on profession, his professional income will increase proportionately. His income will increase proportionately. Today, what I am doing, let's assume I have 100 hours. In the 100 hours, 90 hours I do my professional work. 10 hours I'm doing my investment. 10 hours I'm doing my investment. This 90 hours was giving me 45 lakh income. This 90 hours was giving me an income of 45 lakh. Extra 10 would have given me extra income. Extra 10 would have given me extra income. 90 hours you are spending for your profession. 90 hours I'm doing teaching. I get 45 lakh income. 10 hours I was managing my portfolio. Instead of doing that, if I don't have an opportunity to teach extra 10 hours, no problem. But if I had an opportunity to teach, why should I miss out on it? So in case an option was available and I am not doing teaching, then I'm losing that money unnecessarily. So this extra 10 hours will give me how much income? So extra 5 lakh you can earn by doing MF investing. By doing MF investing, you can earn how much? Extra 5 lakh. And what will you lose? 2 lakh. You will lose 2 lakh and earn 5 lakh if you opt for mutual fund. If you opt for mutual fund, earn 5 lakhs, lose 2 lakh. What is the net gain or loss in investing in MF? There is a net gain of 3 lakh. There is a net gain of 3 lakh rupees by investing in mutual fund. Net gain of 3 lakh rupees by investing in mutual fund. Clear? Any doubts on this? Now, this may look like I have done an MCQ. No, I did not do an MCQ. Question 2, same. Mr. Alex, a practicing chartered. I'm not going to do the question. I'm just trying to explain that some of it in MCQ itself will get over. Some of it descriptive needs to be done. Mr. Alex, a practicing chartered accountant, can earn a return of 15%. He is considering a recently announced equity scheme, 6%, 2%. First is, what should the mutual fund earn? Then the second part, current professional income is 40 lakh, portfolio value is 50 lakh, 10% of the time to manage the profession. All those explanation is there, and you have to do a cost benefit analysis. So if you want for practice, you will practice question number 2. You don't want to practice, don't practice it. For me, MCQ is the most important part. MCQ will cover. Exam MCQ will not cover. It will not come. So that is why practice could be needed. So some question, if you practice after the class, it will ensure that you are done with along with the classes. Along with the classes, it should get over, and that is only possible by practicing certain questions here and there. Every question I cannot discuss in MCQ. These are initial concepts I'm discussing in MCQ. As I move to the later concept, I will have to start doing problems. Any doubts till this? So first is MF return versus the own return. MF return has to be more than own return because MF is incurring certain expenses and I want payment for those. I want the MF to pay me for all those. So indirectly MF has to earn 15-16% so that I can get my 12-13%. Clear? Any doubts on this? Okay, next is, just give me a minute. Just 1 minute. Okay, return in a mutual fund. How do I calculate return in a mutual fund? Return is a function of two things, dividend and capital appreciation. Anybody who earns a return in a financial investment, it is dividend and capital appreciation. If you invest in a property, return is a function of rent and capital appreciation. If you put it in a fixed deposit or if you put it in a bond, interest and capital appreciation. So here it is dividend and capital appreciation. One simple formula for return is what I get back minus what I give divided by what I give. What I get back minus what I give divided by what I give. Now what is the logic? I gave you 100 rupees. You gave me back 110 rupees. My return is 110 minus 100 divided by 100. 110 minus 100 divided by 100. That's a very simple logic of a return. So return is nothing but NAV1 minus NAV0. What is NAV1? Is the closing NAV minus the opening NAV. There is a closing NAV of a mutual fund and there's a opening NAV of the mutual fund. Closing NAV minus the opening NAV. NAV1 minus NAV0. Along with that, there is a D1 which is called dividend and there's a CG1 which is called capital gain one. CG1 does not mean capital appreciation. You will unnecessarily confuse yourself with capital appreciation. CG1 means the mutual fund, when they give dividend to you, they can pay dividend out of their dividend income. They can pay dividend out of their dividend income, or they can pay dividend out of their capital gain income. Out of their capital gain income. The mutual fund earns dividend income as well as capital gain income. If they pay out of dividend, it's called D1. If they pay out of capital gain, it is called CG1. Practical world, these two terms do not exist. It's only dividend. It's only dividend. But exam question, you may see D1, CG1, D1 and CG1. D1 means dividend paid out of dividend income of the mutual fund. CG1 means dividend paid out of capital gain income of the mutual fund. Then what is your capital gain? Your capital gain is NAV1 minus NAV0. Your capital gain is NAV1 minus NAV0 whole divided by NAV0. Clear? Any doubts till this? Now, I invested 100. I got back 110. What is the return? 10%. But then I tell this is in 1 month. This is only in 1 month I'm getting. When I said 10%, people will not get excited. But when I say 10% in a single month, people will get really excited. 10% as such was not making bigger. It was not a great investment, but 10% in 1 month is a huge. So that is where we have something called as annual return, where we multiply with 12 by m. Where we multiply with 12 by m. If you don't multiply with 12 by m, it is called holding period return. And if you multiply with 12 by m, that is called annual return. This is concept 3, holding period return versus the annual return in the concept book. Holding period return versus the annual return. What is holding period return without doing 12 by m? What is the annual return multiplying with 12 by m? Holding period return means I am not worried about your time period of investment. You could be a 5-year investment. Somebody will say I earned 500%. I said great. In how many years? 25 years. Which means in a year it's 20%. In a year it is 20%. Not a very great return. Okay, 500% when I say I get a lot excited. But then you tell me 500% for 25 years. That is where annual return. Annual return is a better measure of calculating the return of any investor. For calculating return, annual return is a better way. Any doubts? Into 12 by m if you do, it's annual return. Without 12 by m if you do, it is called as holding period return. Clear? Now let's look at this. Opening NAV 20, you will write, when I apply the formula, you will write along with me. Opening NAV 20, closing NAV at the end of month 3, 21. Dividend paid in month 1, 2 rupees. Month 2, 50 paise. Dividend declared but not yet paid. Dividend declared but not yet paid. Does not matter. It is my income. Moment you have declared it, it is my income. So dividend paid is my income. Dividend declared is my income. All these are my income. What is the annualized return? Right? Annualized return is equal to NAV1 minus NAV0 plus D1 plus CG1 whole divided by NAV0 into 12 by m into 12 by m into 12 by m. What is NAV1? Is the closing NAV. What is the closing NAV in this example? Opening, dividend, add all the three. All the three dividends put together. 3 divided by 20 into 12 by 3. 12 by 3. 3 months calculation into 100. 12 by 3. Without 12 by 3 is called holding period return. With 12 by 3 is called as the annualized return. Clear? What's the answer you get? 30 seconds. Give me the answer to the next example below. 30 seconds for you. Live online, guys, you can type it in the chat box. Next, yeah, 30 seconds. Live online, guys, you can type it. Okay, 16%. It is 8 percentage for 6 months, 16 percentage for a year. Question number 3, 4 for the second edition. Again, 1 minute for you. Read, solve, and get me the answer. 1 minute. This is a proper exam question. Third question in third edition. Fourth question. I cannot drag it up. If I drag it up, the answer will be visible. So you will have to manage it. 1 minute for you. It's a study mat question, exam question, whatever way you want to call it. Yeah, I've got answers in live online as well as here. 0.6375 percentage monthly return they've asked. If they are, just write R into 12, 7.65 percentage for a year. R into 12 you do. This is not needed, but in exam they may ask. 0.6375 into 12, 7.65%. Clear? Okay. Now, in one exam question, they gave holding period return as well as the annualized return and ended up asking you to calculate the period of holding. Ended up asking you to calculate the period of holding and then reverse work until the date of investment. Reverse work until the date of investment. Period of holding through, this is concept 7. In my this book, in the chart, I have rearranged the concepts a little bit. Whenever you want to do preparation, you can use them together. Okay, this and the other one. Period of holding through holding period return and annual return. Period of holding is equal to HPR by annual return into 365. Do I need to remember the formula? No, I don't even remember any formula. What is logic? HPR is 2%. Annual return is 12%. Logic is 12 is equal to 365. 2 is equal to question mark. 12 is equal to 365 days. 2 is equal to question mark number of days. 12 is equal to 365. 2 is equal to question mark. That is what we are trying to do here. 12 percentage 12 months. 2 percentage 2 months. 2 percentage is 2 months. I have a formula, but formula is something doesn't go in my head. Without formula, try to understand logic. You'll be in a position to proceed. In case still you want to go through the formula route, that's your wish. But otherwise, logic is very simple. 12 percentage 3 for 365 days, 2 percentage for question mark number of days. Can we proceed? Another important point. Should I do days calculation or months calculation? And because of this, ICI has deducted marks, unfortunately, for students. Days calculation or months calculation. Anywhere in the AFM subject, if question says a year consists of this line, a year consists of 360 or 365 days, anywhere there is, you will go to futures valuation later or you will do option valuation. Anywhere the question uses the word a year consists of 360 or 365 days, in your annual return you will do 365 divided by number of days. 365 divided by number of days. Anywhere you see this line, you don't see the line and you know the date of investment, your choice, but normally I'll do months calculation. Does this make any difference? To me, it doesn't make any difference in the practical world. Whether you do 365 by 30 or you do 12 by 1, broadly the answer will be very close. But still, from an exam point of view, what can I do? I can't do much. So from an exam point of view, if question says a year consists of 360 or 365 days. If that wording is there in a problem, your job is to do calculation in number of days. Your job is to do computation in number of days. If no such information is there, go ahead and do months calculation. Go ahead and do months calculation. In this also one more headache will come. What is the headache is, when I do my number of days calculation, how do I calculate the number of days? Again, all these are little bit ambiguous area. What is number of days calculation? I invested on March 1. Last date is March 31. Should I consider March 1 in the days calculation? Should I consider March 31 in the days calculation? Should I exclude? No clarity is there. No clarity is there. So it is one ambiguous area. One attempt they will consider March 1 in the days calculation. One attempt they will not consider. I will not be very clear. What I normally tell student is, consider the date of redemption in the number of days, and date of investment, ignore it. This did not happen in, I think, recent attempt or earlier attempt. One student messaged me saying that they have not done it this way. I cannot help it. Again, I'm saying, see, I can only tell you what will work. Ambiguous area, some ambiguous areas will be there. One ambiguous area is calculating number of days. All this headache would have got removed if I do number of months. This headache itself will get removed if I do number of months. That is why I feel months is easier, better. See, practical world, what matters is, if somebody says I invested on March 1, did you invest in March 1 morning or March 1 evening? Morning means consider in the days calculation. Evening means ignore in the days calculation. That clarity you will give me in the practical world. In exam, you give me a question without clarity, I don't know what to do. So there will be clarity missing on the number of days part. Number of days part, it will be a headache only. Number of days will become a tough task for us in case whenever you do days calculation, time permits, time does not permit. That's your wish. If you want to write two alternate answer, not two, in fact three. March 1 can be considered, March 1 can be ignored, March 31 can be considered, March 31 can be ignored. So multiple situations will come. So many rework and all you cannot do. That is not possible. So this is one ambiguous area. Should I consider number of days of investment? You send me a message saying that why are we considered? I'll say ICI solution. Why we have not considered? ICS. Only one answer will come from my side. Then you will ask me a next question. This is direct question with many students. Will ICI award me marks? If I had known ICI is going to award marks or not, I would not be telling, there's too many answers are there. I will tell what exactly ICI is doing. No. So will ICI award marks? Not award marks is not in my hand, not in your hand. I can only explain you logical solution, as well as the 90% of the time I'll only follow ICI solution. 95%, in fact, 95% my solution will match with ICI solution. Some place here and there I'll deviate little bit. That also only little bit deviation will be there. This is one area. This is one ambiguous area. Number of days calculation. Clear? Any doubts on this? For number of days, date of investment can be considered, can be ignored, and date of maturity can be considered, date can be ignored. If I invest on March 1, I normally ignore March 1. 2 to 31, I'll consider and write 30 days. This was working in most of the exam question. Suddenly, I think in the latest attempt or the earlier attempt, this did not work. This did not work in that attempt, and ICI made little bit. All these headache gets removed in MCQ. That is why I feel MCQ is the best way of, because the four choices are there. You do including, the option is not there. You do excluding, option is there. You put a tick mark. So in MCQ, all these problems are removed kind of, because my answer, if not there in the options, I will change the assumption. I'll end up changing the assumption. That is why one good thing I said it is they did 30 marks of MCQ. In fact, I wanted to become 100 marks of MCQ. That is what international curriculum. CFA is fully MCQ based. It is fully MCQ based. So practically, if you want to test concept clarity, go through this approach rather than telling students to remember things or do ambiguous questions. All that we cannot help. Clear? Any doubts on this? Let's do another question now. Let's come to question 4. Mr. A has invested in the Grow Rich mutual fund scheme. The details of the MF scheme are given below. Annual value at the beginning of the month, annualized return, distribution in the form of CG and income, distribution in the form of CG and income. Calculate the month end NAV of the Grow Rich mutual fund scheme. Month end NAV, month end NAV, 1 month calculation I have to do. They have given return for a year, 16% is for a year. Let's write. Just give me a minute. Live online guys are facing a little bit of an issue. Let's come to the fourth question. It is here. I have to calculate month end NAV. They have given me the annual return in the question. Question 4 here. It is question 5 in the second edition, but I have modified the problem little bit. There is some modification, so you refer this only. Right. Return is equal to NAV1 minus NAV0 plus D1 plus CG1 divide by NAV0 into 12 by M into 100. 12 by M into 100. Now this is a reverse working question. Whenever you do into 100 in the other side, this side you should write the number as it is 16. Don't write 16 percentage, write 16 as it is. If you do into 100 in the other side, calculator will give the number as 16. It will not give the number as 16%. So if you have done into 100, this side write 16 is equal to month end NAV has to be found out. NAV1 minus 78.5 plus 0.4, 0.3 divided by 78.5 into 12. How many months is the investment? 1 month into 100 into 100. Solve it, you will get NAV1 answer. You keep solving it. I also solve it. They have told us to do 2 decimals calculation. Round off to 2 decimals. You should get 78.85. One caution, whenever you do any reverse working question, what is reverse working is anything which is balancing figure you calculate after you are done, substitute 78.85 in place of NAV1 and check whether you are getting 16% or not. Many a times reverse working students make mistake. Latest attempt had huge number of reverse working question. So in the calculator after you are done, 78.85 minus 78.5 plus 0.4 plus 0.3 divide by 78.5 into 12 by 1 into 100. Are we getting 16 or not? Check it. Some up and down, rounding off, no problem. Huge up and down, errors in calculation. Every question this has to be done. Every question you have to go ahead, and after you are done, reverse working. This I will not tell it in the next area and all. This question I am telling you because I wanted you to do this check. There are certain rules. For example, I have told you few rules saying that 1 year consists of this. I'll suddenly do it in some other question. That time I'll not explain again. So in the chapter, certain points when I say it is relevant for the entire curriculum. So here, any reverse working question you do after you are done, substitute the number. It will take you 20 seconds to check your answer. 20 seconds only it will take. Clear? Any doubts on this? Second part of the question, I don't know why they asked. Brief comment. I don't have any comment on this. ICI said NAV has gone up. That's not a very good comment, but okay. They have given the comment. You will give the same comment. I'm not discussing much on that. Closing NAV is increased by 0.35. It's a very simple comment they have made. So I have to make such a comment. Clear? Any doubts on this? Done. Next is dividend. Whenever a mutual fund declares dividend, there are two things which can happen. First thing is dividend means dividend rate into face value. Dividend rate into face value. It is not dividend rate into NAV. Some students think it is on NAV. No, it is on face value. In a share, when dividend is declared, dividend rate into face value There are other ways also. If they give dividend yield, that is on market price or the NAV. Dividend yield is on market price or the NAV. On the market price or the NAV. There's another variant. Another variant is dividend payout ratio, which is on earnings per share, or profits of the company. In MF chapter, dividend rate is on face value. One question IC asks, dividend yield. Yield is on my investment or on my NAV. Yield is on my investment or my NAV. Two things can happen: dividend payout, dividend reinvestment. Payout means I will give money to you. How do you calculate return? What I get back minus what I give, divide by what I give, into 12 by m into 100, whatever you learnt in concept 3, NAV1 minus NAV0 plus D1 plus CG1 divide by NAV0 into 12 by m into 100, complete the calculation. That is your normal approach. Dividend reinvestment means I had a dividend of 1000 rupees. I give you 1000, you give me back 1000, and I give you extra units. What is reinvestment is, instead of giving you money, I'll give you extra 50 units, 40 units, 20 units. How do I calculate this? Date, units held. What is units held? What is the opening units? On the opening units, I will receive dividend. A into face value into dividend percentage. A into face value into dividend percentage. Reinvestment NAV will be given. What is reinvestment NAV? Is at what rate are we doing reinvestment? I take that reinvestment NAV and get the new units allotted. Closing units is opening plus new. This becomes for the next date. This becomes the opening units for next dividend when it is paid. The dividend can be paid multiple times. Whenever the next dividend is paid, this becomes the opening. On that again dividend is paid. I do reinvestment. I get closing units. Again the scenario keeps continuing. In this case, that formula will not work. NAV1 minus NAV0 formula will not work. Why it doesn't work? Because the number of units change. Then what is the formula? Same formula. What I get back minus what I give. What I get back? Closing units into closing NAV. What I give? Opening units into opening NAV. What I get back? Closing units into closing NAV. And what I give? Opening units into opening NAV divided by what I gave, amount invested, into 12 by m if you want to do. That is called annualized return. Without 12 by m if you want to do, that's called holding period return. Clear? Any doubts on this? What I get back minus what I give, divide by what I give. Return formula remains same. Any chapter you take, return formula only is this. I can keep changing the names, saying that D1, CG1, I1, R1. I can change the names. Formula is only one thing. People, if you talk to a person, ask them what is the return calculator, he'll say I gave 1 lakh, he gave me back 1 lakh 20, my return is this much. That's what people understand. So finally what happens in money terms is what I want to see. So what I get back minus what I give, closing value minus opening value, divide by opening value, into 12 by m if you want to do the annualized part, into 100. Anyway has to be done. Any doubts on this? Let's see this now. Question 5, a frequently tested exam question. Mr. X, an investor, purchased 300 units of ABC mutual fund at the rate of 12.25 1 year ago. Over the year, Mr. X received 1.25 as dividend, 1 rupee as capital gain distribution. You are required to find out Mr. X holding period return. Holding period means no 12 by m. No 12 by m. Assuming that this no load fund, what is load and all I'll explain later. There is something called entry load and exit load, has an NAV of 13 as on today. This is nothing on dividend reinvestment. What formula will do? NAV1 minus NAV0 plus D1 plus CG1 divide by NAV0 into 100. You are also not going to do. I am also not going to do. Answer is 24.49%. I don't want to spend time on this. I've already done 24.49%. Then comes the Mr. X holding period return, assuming all the dividends and capital gain distribution are reinvested at an average price of 12.50. Reinvested means you did not get dividend in rupees, you got dividend in units. Can I use the formula directly? Formula application not possible. Directly you cannot do formula part. So now you have to get into another calculation. Let's start. Computation of closing units, computation of closing units, closing units, closing units, particulars calculation amount, particulars calculation amount, opening units, opening units. I can do it 7 column format. This is only one reinvestment, so I'm not doing that 7 column format. Opening units. How many units were there? 300. Opening NAV, opening NAV. What is the opening NAV? Multiply the two. Opening investment. Opening investment. 300 into 12.25, 3675. Clear? Dividend per unit. Dividend per unit. How much is the dividend paid per unit? It's not 1.25, it is 2.25. That's why I initially said capital gain is also a dividend only. Capital gain is also a dividend only. It is nothing to do with the capital gain which we earn. Capital gain distribution is also a dividend. Dividend is also a dividend. So put together 2.25. Dividend in rupees. 300 into 2.25. Dividend in rupees 300 into 2.25. 675 is the dividend I am getting. Now there will be a reinvestment NAV given. These units, the 675 will become units at some rate. What is the reinvestment NAV given? Reinvestment NAV is 12.5. What is reinvestment is? I don't want to give you as dividend. I want to give you extra units. I want to give you extra units, and those extra units will get allotted at the rate of 12.5. Extra units allotted. 675 divided by 12.5. 54 divided by 12.5, 54. Closing units, closing NAV, and closing value. Closing units, closing NAV, closing value. Number of units from 300 goes up to what number now? 354. What is the closing NAV? 13 multiply 4602. To put it simply, I gave 3675. I got back 4602. Only thing I understand is this. I don't understand any of this formula and all. Don't give me a formula. You gave me 3675. I have returned back 4602 with you, and you are very happy about it. Return is what I get back 4602. What I give 3675 divided by what I give 3675 into 100 because holding period. 4602 3675 divided by 3675 into 100, whatever number, 20, 25.22. Question will also ask which is better, whichever gives a higher return. Whichever gives a higher return. If the first option gives you higher return, that is better. If the second option gives you higher return, that is better. So here 24.49, 25.22, 25.22 is the better return or the better alternative. Any doubts on this? So what is reinvestment? I don't give you money. I gave money, took it back immediately and gave you extra units. Gave money, took it back and gave you units. Clear? Any doubts on this? Formula application will not work. That is your NAV1 minus NAV0 formula will not work. So you have to do it in this manner. Any doubts here? Okay. Now there are two types of mutual fund scheme. One is called as an open-ended scheme. I'm not going to do a problem on this because in the class itself I gave it as homework only. Open-ended scheme and there's a close-ended scheme. What is open-ended scheme is person can enter at any time, exit at any time. He can enter and exit at any point of time. How do I calculate return? NAV1 minus NAV0 plus D1 plus CG1 divided by NAV0. Close-ended scheme, entry and exit happens at specified time because you can enter on only maybe month end, or you can enter only on quarter end, or it could be one time entry and exit after 10 years. Because exit is not there for a close ended scheme, it is listed in stock market. Because it's listed in stock market, anybody can buy these and anybody can sell this. You wanted to move out, please sell it. You wanted to enter, please buy it. But MF will not get the money from you. MF will not get the money from you. Normally what happens, you gave the money to me. After this happened, I said no more entry, no more exit. I am going to manage your money. So what you did, you wanted money, you transferred your units to your friend. So that can happen. That will happen in the stock market. In the stock market, the purchase and sale cannot happen at the NAV. Then what rate it will happen? It can be slightly more than NAV or slightly less than NAV because market trading happens. In the trading, you may end up paying slightly more or slightly less. So for a close-ended scheme, you should use in the formula P1 minus P0, which can be different from NAV1 minus NAV0, which can be different from NAV1 minus NAV0. Why is there a difference? Market dynamics, I can't really help it. Market dynamics can make the performance little more or little less. Maybe I'll do it in an MCQ itself. NAV is 10 rupees, 1120, 14, 31, 12, 12 rupees. Unless I tell you to look at the book, you need not look at the book because many places I'll keep shuffling. You may not be able to find in your book. You'll only waste time. When I tell open the book, open this question number, that time only you focus on it. Otherwise, everything is visible in the screen. You just focus on the screen. 10 rupees, 12 rupees. Dividend capital gain 50 paise, 1 rupee. On 31/12, the unit was trading at a discount of 2%. At a discount of 2%. So it's not trading at 12 rupees. It is trading at a 2% discount. So you cannot write 12 in the calculation. You have to write 12 minus 2%. 12 minus 2%. On 1/1/2014, it was trading at a premium of 2%. So opening is not 10 rupees. 10 plus 2% and closing is 12 minus 2%. Then apply the formula. Then end up applying the formula. Only challenge here is because it's traded in the market dynamics, it can trade at slightly premium, slightly discount. Anything can happen. Anything can happen. It's your bad luck if you enter at a premium and exit at a discount. All that can happen in a practical world. So for a close-ended scheme, I should not use 10 and 12. What should I use? 10.2, 11.76 as per this example. As per this example, it is 10.21, 11.76. I'm not doing the calculation. Wherever calculation is needed, I'll do it. Otherwise, focus is only on getting the concept clarity. Thereafter, you can do whatever practice you want to do. MCQs itself you solve, that itself is sufficient. That itself will take care of your exam requirement along with certain practice question. Any doubts on this? Okay, taxation impact. This, when I do a problem, some question will have short term capital gain, long term capital gain and all. For that purpose, I'm giving this. Cost of acquisition of bonus unit. Bonus unit is 0. When you calculate your short term capital gain or long term capital gain for bonus units, the cost of acquisition will be taken as 0. There are certain specific dates beyond that the bonus unit has a value. All that I'm not getting into. This is what ICA does. I'm explaining that. Securities transaction tax is not a tax deductible expense. It is not a tax deductible expense for computing capital gain. When you calculate capital gain, you will not have tax deductible expense. That STT will not be subtracted in the calculation. These 2 points you have to see. STT is not a tax deductible expense and cost of acquisition of bonus units is 0. Clear? Let's see a very lengthy question now. Question 7. You are not going to do, you will be in listen mode only. Sunmoon Mutual Fund sponsored open-ended equity-oriented scheme, Chanakya Opportunity Fund. 3 plans: dividend reinvestment, bonus plan, and growth plan. At the time of IPO on 1499, Mr. Anand, Mr. Bachchan, and Mrs. Charu, three investors, invested 1 lakh each and chosen B, C, and A plan respectively. History of the fund is as follows: date, dividend percentage, bonus ratio, NAV for plan A, plan B, and plan C starting from 1499. Data is given for 31/7/2009. On 31st July, all three investors redeemed all balance units. Calculate annual rate of return to each of the investor. Calculate the annual rate of return to each of the investor. LTCG exempt from income tax. STCG subject to 10% income tax. STT 0.2% for sale and redemption, not for purchase, for sale and redemption. Ignore education cess. Clear? This is the information. I have three scenario. One is called dividend payout reinvestment. Second is called bonus plan. Third is called growth plan. Growth is the easiest. Why it is easiest? You invested one money, you will get the same units on the last day. You will get back the same units on the last day. No extra units allotted. No extra units allotted. In a bonus plan and a dividend reinvestment plan, extra units will be allotted and we have to calculate those closing units. We have to calculate. How will I calculate? Like 300 became 354. Now it will, I think, start with 10,000. 10 will become 10, 5 will become 11, will become 12, will become 13, 14, 15, 16. Like that, you have to do multiple calculation. You have to do multiple calculation. First period calculation, we both will do together. Second period calculation, I will only do in Excel. So there are totally 5 dividends: 20%, 70%, 40%, 25%, and 40%. 5 dividends have been paid. Totally 5 dividends have been paid. I have to do 5 times calculation. Obviously, it will be a very time consuming exercise. First period, we will do it together. Second period onwards, I will do only in Excel. Let's start. Working note 1. Computation of closing units for plan A, dividend reinvestment plan. Closing units for plan A, dividend reinvestment plan. Date, dividend percentage, opening units, dividend in rupees, reinvestment NAV, dividend in units, closing NAV. Date, dividend percentage, opening units, dividend in rupees, reinvestment NAV, dividend in units, and closing NAV. This will give me the closing units for the first one. That will become the opening for the second one. This will give the closing for second, third. We will do one period. Beyond that, I will just show and then proceed forward. When is the first dividend declared? So write 28/7/2003. 28/7/2003. What is the dividend percentage? 20%. How much did I invest in this fund? Have they given at what rate did we invest? No, if nothing is given, it's at face value. In the initial public offer, it will happen at face value, and if nothing is given, it's at face value. So initially, it would have happened at 1 lakh divided by 10. 10,000 units. On these 10,000 units, dividend will be like this: 10,000 into face value into dividend percentage. On 10,000 units, 10 rupees into 20%. 10,000 into 10 rupees into 20 percentage. On face value. Some students applied it on the NAV, it will go wrong. Dividend is always on face value unless they use the word dividend yield. On this date, plan A, what is the NAV? Plan A, what is the NAV? I will now get 20,000 divided by 30.7, two decimal units can be in decimals. 20,000 divided by 30.7, and I end with 10,651.47. Beyond this, you will leave 7-8 lines gap. You want, do it later. You don't want to do, that's your wish. You understand one calculation, that is what my objective is. I can only explain, I cannot keep spending time on calculations because focus will shift to calculations if I keep spending time there. 10,651. Another period I'm going to do it in Excel, no need to do it. And second, third, fourth, fifth and all, I'll show it in the printed material. Another period I'm doing it just for getting more clarity. And after that, you need not note down the second calculation. Any doubts on this? When is the next dividend paid? How much is the dividend? 70%. On this, it is 10,651.47. The dividend number is 10,651.47. How much dividend I'll get? 10,651 into what? Into 10 into 70%. 74,560. What is the NAV on that day? I will get extra units, which is 74,560.29 divided by 58.42. Divide by 58.42. The cycle will continue. The cycle will continue. You can do this if you want. You need not do it if you don't want. If you don't want, ignore it. Clear? So this is the calculation. I am not doing the calculation here. It stops at 14,906. It stops at 14,906.16. After this is done, I have to calculate return. For return calculation, closing value minus securities transaction tax minus short term capital gain, and then ultimately subtract the amount invested and you will get the return, because here there is a short term capital gain and a securities transaction tax. Clear? Any doubts on this? Assuming you got this 14,906, we are now proceeding to return calculation because there is extra 2 item. Clear? Any doubts on 14,906? I don't want to spend time because there are places where I will save time, and that's how we will be able to cover more concepts, more questions. Any doubts? Now write return computation. Leave space if you want to do it later. Return computation, particulars calculation amount. Particulars calculation amount. Maturity value. Maturity value 14,906. Whatever closing units we would have calculated into, tell me the NAV on the last day. 53.75. I'll round off without any decimal. It doesn't make any difference here. The amount is huge. I get 8,01,206. If securities transaction tax was not there, LTCG was not there, directly formula closing value minus the opening value divide by amount invested into 12 by M into 100 you do, you will get the annual is return. Point number 2, less STT, less securities transaction tax, less STT. What is the STT rate? 0.2% of 801,206. Again, you can round off, it will not make any big difference to the final answer. 1602. Clear? securities transaction tax 1602. Third, STCG tax, short term capital gain tax. STCG tax. Now, I say if they want to complicate, as per the current regime, even LTCG is taxable. So, LTCG also you have to calculate, STCG also you have to calculate. I hope they don't get into that amount of testing, but if they want, they can bring in both. How do you calculate short term capital gain? That is known, I'll explain it, but it can be long term also, it can be short term also. Now, I have to go to this table. We are selling on which date? What is the date? 31. Any units allotted between 1st August 2008, 1 year period, 1st August 2008 to 31st July 2009 will be a short term capital asset. Any units allotted between in the last 1 year, in the last 1 year, which is only this 24/3/2009, 24/3/2009. On this you have to pay short term capital gain tax. On this you have to pay short term capital gain. If LTCG is applicable, on everything I have to pay. On 1/4 I have to calculate long term capital gain. On 28/7 I have to calculate long term capital gain. On 31/3 I have to calculate long term capital gain. On 31/10 I have to calculate. On 15/3. So that amount of testing they will not get into it. In fact, they may end up even removing the short term capital gain part also, or they may say long term is exempt, short term is taxable. So last 1 year allotment, last 1 year. How is the capital gain calculated? In this case, whatever was the NAV on the date of allotment is the purchase price. Whatever was the NAV on the date of allotment for dividend reinvestment, whatever was the NAV on the date of allotment is the purchase price. What is the selling price? 53.75. No STCG deduction. Sorry, no STT deduction. No securities transaction tax deduction. So now write capital gain 10% into 10% into 1144.43. This number you will get if you do the entire table. Okay, 1144.43 into 53.75, 53.75, and on that date it was 48.10. On that date it was 48.10. ₹647 is what I get as short term capital gain tax. The capital gain could be some 6,470. Tax is 647. Clear? Now, after subtracting this only, I get my closing value. My closing value is after these two subtraction. Closing values after subtracting these two items. Clear? Any doubts in this? So, point number 4. Closing value. Technically, what I get back. Closing value, what I get back. 7,98,957. Closing value, what I get back. 798,957. Clear? Then I have to compare with what I give, which is 1 lakh rupee, which is 1 lakh rupee. Point number 5, investment, what I give. Return equal to 798,957, what I get back, minus 1 lakh, what I invest, divide by 1 lakh. Can you tell me the number of months of investment? Calculate it properly. Number of months of investment. You invested on 1,499, redeeming it on 31st July 2009. Number of months from 1,499, 31st July 2009. Live online guys, you can also tell number of months. Yeah, I've got the answer in live online. 124 months. 124 months. It's basically 10 years and 4 months. 10 years and 4 months. So 12 by M, 12 by 124 into 100. 12 by 124 into 100. Clear? This is the return calculation. Formula remains same. Everything remains same. Just that units calculation is a complex computation which I had to go through and get to the number. 798 minus 1 lakh divide by 1 lakh into 12 by M into 100. 12 by 124. Any doubts on this? Clear? Can you proceed? What's the final answer? Okay, 67% is something. Clear? This is one approach, which is dividend reinvestment. Second approach is called bonus plan, and third is a growth plan. Now let's come to bonus. In bonus, what will happen is you start with 10,000, but a bonus will get declared and units will go up. Bonus will get declared and units will go up. Totally three bonuses are there. Three bonuses are there. I can do all the three if I want, or I do one situation, you understand, and then we kind of proceed forward. After bonus is calculated, maturity value less STT less short term capital gain, final value less amount invested, return. All those rules remain same. Nothing changes. All those rules are going to remain same. Let's start. Number of units, working note, whatever number, computation of number of units of bonus plan. I have to write along with the name, whoever is investing it, all that. I'm not giving a very perfect answer. My focus is just getting the concepts right. Number of units of bonus plan, date, bonus ratio, opening units, units allotted, closing units. Date, bonus ratio, opening units, units allotted, and closing units. And closing units. When is the first date bonus is paid? 31 3 4. What is the ratio? We start with 10,000. We start with 10,000. What is 10,000? Is 1 lakh divided by 10. I start with 10,000. I'll be given more units now. I'll be given more units now. 10,000 into 5 by 4 into 5 by 4. I'll be allotted extra units now. 10,000 into 5 by 4. 22,500. Next bonus, let's close it. It is not taking much time, so I'll close this fully. Next bonus, another date, another bonus, closing units. What's the next date? 31 March 2008. What is the ratio? We start with 22,500, 1 by 3, and end with 30,000. End with 30,000. What's the next date? What is the ratio? 30,000, 37,500. Clear? I am not going to spend time on return computation here. What will you do for return computation? Less securities transaction tax, less short-term capital gain, cost of acquisition of bonus units will be zero. Cost of acquisition of bonus units will be zero. Clear? Any doubts on this? The best is the growth plan, where directly you will go only to this table. Directly you will say maturity value is 10,000 into the closing NAV. 10,000 into the closing NAV. No change in units. No change in units. No short-term capital gain. 10,000 into the closing NAV. Securities transaction tax will come. Clear? Any doubts on this? I have not done the entire question, but I know what needs to be discussed. I have discussed that much. At home, you want to practice, you practice it. The rule remains the same. I will be having, see, normally ठीक है, I'll explain as we proceed. I'll tell you what we will do. Any doubts on this? Any doubts on this? Three types of plans are there. There's a dividend plan, dividend reinvestment plan, there's a bonus plan, and there's a growth plan. Easiest calculation, growth plan. Opening units equal to closing units. Opening units is equal to closing units. Apply, close the answer. In case it is a dividend payout plan, then that formula will work, NAV1 minus NAV0. But dividend reinvestment, I'll have to get into this. What is dividend reinvestment? Opening units and the closing units will not match. ICI says dividend plan, you will have to take it as dividend reinvestment only. Some student asks, can I take it as payout plan and close it? No, payout cannot be taken. If dividend means dividend reinvestment, because there only calculations are needed. In payout, no calculations are needed. In one exam question, they ended up missing out that name dividend reinvestment. They just said dividend plan. Dividend plan means dividend reinvestment plan. Clear? Now, how will I do the calculation for reinvestment? I start with opening units, the dividend rate. I calculate the dividend in rupees, reinvestment NAV, units allotted, closing NAV. This cycle will keep continuing multiple times. Clear? Any doubts? In a bonus plan, start with date, opening units, bonus ratio, units allotted, closing. The columns may interchange. Sometimes I'll write it like this, sometimes the other way around. Doesn't really matter. I'll have to get to the closing units. Growth plan, no extra calculation needed. Clear? Any doubts on this? Anyone needs any extra explanation? Let me know. Clear? Now, this return which we calculated is technically wrong. When I say technically wrong, whenever it's more than a year, ignoring time value of money is wrong. In the formula, what I did, 12 by M, you got 67% is the answer. Whereas if you consider time value of money, it will be only 30-40%. If you do time value of money into picture, it will be 30-40% only. How will I factor time value of money? By calculating IRR. By ending up calculating the IRR of the investor. How will I calculate IRR? Day 0 in that example which you did, 1 lakh. Month 124, you get back some 7 lakh rupees. You have to get one positive NPV, one negative NPV, and then complete the IRR. So if question says calculate effective yield, it can be understood two ways. One way is our calculation through the normal approach, which is 12 by M. Another approach is calculating IRR. IRR is more logical approach. But in exam question, rarely we do IRR. For example, 124 months and all, IRR very difficult, because 124 months, if you have to do, either they have to give the table values, and if they don't give the table values, you doing on your own is impossible. 124 months, you will get stuck. I can convert into years and do. That 124 months can be converted as 10 years. If it was proper 10 years, okay. 10.4 years, 3 years, calculator will not give the answer. Excel can still give you the answer. So, better approach is IRR. Where did this got tested? This got tested in one mock test paper by ICI. I'll show you the question. Nothing much is there. Same table, exactly like the previous one. What is the effective yield per annum? Below, use the following PV factor. 2% and 4%, 8% and 13%. One answer will be between 2 and 4. Another answer will be between 8 and 13. That is why those factors are given to you. 2 and 4%, 8 and 13%, and this was exactly 5 years. 5 years calculation. Clear? Able to understand this? I can calculate my return through 12 by M formula, which to me is a wrong approach. It is a wrong approach, but every question I'll be doing that only. 12 by M. Anywhere it is more than a year, time value of money has to be brought into picture. How do you bring time value of money? By calculating IRR of the investor. So question 8, 100% you should practice at home. This will take care of what I explained in the previous question also, that is return units calculation, and it will also take care of the IRR part also. It will take care of the IRR part also. IRR I'll spend time when I go to capital budgeting. There I'll spend time, but here I don't want to spend time on IRR. So return calculation can be in two ways. One way of calculating return is using the formula, which is a wrong approach. Right approach is whenever it's more than a year, you should go through internal rate of return, because time value of money is critical. You have to bring that into picture. Clear? Any doubts on this? Done. Okay, next comes concept 12, which is called load in mutual fund. There are two types of load in mutual fund: front end load, other name for this is called entry load; back end load, Other name for this is called exit load. There is a entry load and exit load. In India, in the year 2008 or 9, Association of Mutual Funds of India have removed entry load. Entry load does not exist in Indian market. It has been removed by Association of Mutual Funds of India. AMFI has removed entry load, but still one exam question came. How do we calculate? I'll explain it. Exit load still exists in India. It exists in India. The mutual fund may charge exit load. Now, what are entry load and exit load is? When you are entering, I tell you to pay extra. That's called entry load. When you're entering into the mutual fund, NAV 10 rupees. You pay 10.2 rupees. You pay 10.2 rupees. When you're exiting, 10 rupees is the NAV. I'll give you only 9.8 or 9.7, 9.6. When you enter, bring extra money. When you exit, you will not get your NAV. So assuming when you enter it was 10 rupees, I'll tell you to pay 10.2. When you exited it is 20. I'll not give you 20, I'll give you 19.8 or 19.7 or 19.6. So there's an entry load and there is a exit load. Entry load at the time of entry into the MF, exit load at the time of exit from the MF, at the time of exit from the MF. Collected extra on entry increases purchase price, increases purchase price. Collected on exit decreases redemption price, decreases the redemption price. How do I calculate? Public offer price minus the NAV divided by the NAV. NAV is 10, but you guys have to pay 10.5. You have to pay 10.5. NAV is only 10 rupees, but you have to pay how much? 10.5. That extra 0.5 as a percentage of 10 is called entry load. When you are exiting, NAV is 20 rupees, but I will give you only 19.5. I will give you only 19.5. NAV minus the redemption price divided by the NAV. Should I remember the formula? No. Understand logic. Logic is very simple. When you are entering, I collect extra from you. When you are exiting, what extra I collect on the base of the NAV is called percentage. When you divide, you get it in percentage into 100, obviously. And when you are exiting, I remove this and give it to you. This is in the concept 12. I'll do an MCQ around this. Unit price of mutual fund is 20 rupees. Public offer price is 21. Tell me the front end load percentage. Public offer price 21. 21 minus 20 divided by 20 into 100. 21 minus 20 divided by 20 into 100. Okay, now I come to another situation which is called reverse working. What is reverse working is, like we calculated the units, I will give you the closing units. You go back and tell me the opening units. Reverse working will become more and more challenging. I give you the closing units. Your job is to calculate the opening units. Let's see question 9. Measures Corpus and AMC on 1/4/2015 floated two schemes: dividend plan, means dividend reinvestment plan, and bonus plan. Mr. X, an investor, has invested in both the schemes. Following schemes except the following details except the issue price. I did not give you the issue price. So one student asked, can I take it as 10 rupees? That is the face value. All that logic will not work here because they have asked you to calculate. You cannot just assume the issue price. Except the issue price are available. 1/4/2015 question mark, 31/12, 31/3, 31/3, 31/12, 31/3, 31/3. Additional detail: investment 9,20,000, average profit 27,748, average yield 6.4. You are required to calculate the issue price of both the scheme on 1/4/2015. Reverse working, I will do one period reverse working, balance same logic will work, or maybe 2 times I'll do reverse working and the same logic will work. In this case, dividend has been paid 3 times. Dividend has been paid 3 times and bonus has been paid 2 times. First, I have to get closing units. For getting closing units, I need closing value. Closing value is equal to closing NAV into the closing units. Closing value is equal to closing NAV into the closing units. What is closing value is opening investment plus the profit. Opening investment plus the profit. Opening investment plus the profit. They have given profit in the question. They have said investment 920, Profit average means per year profit. How many years investment? Tell me the number of years. 1 4 2015 to 31 3 2020. 5 years of investment. 5 years of investment. Let's do plan A first. Dividend plan. Right? Dividend plan. Dividend plan. Closing value is equal to investment plus profit. Investment plus profit. Investment plus profit. How much is the investment made? 920. Profit is 27,748.6. 27,748.6. Average means per year. The term average will indicate per year profit. How many years? Tell me the closing value. 58. 743. Please split this into two. Units, which is what I want. NAV closing is there in the question. NAV is there. I wanted the units. I'll get the closing and then I go back to opening. I'll get the closing and then I get back to opening. What is the closing NAV for plan A? 40. Tell me the units balancing figure. 21. 607. Now I have to do reverse calculation and get the earlier data. 21 607. Any doubts on this? Front calculation is easy to do. Backward calculation, some challenges can come in exam. Let's write the same format. Write the format, same thing. Date, dividend, opening, date, dividend percentage, opening units, dividend in rupees, reinvestment NAV, dividend in units, closing NAV. This table I have to do 3 times. First I'll do one table, I'll repeat a second table, I'll repeat a third table. Why we are repeating, you'll understand. 3 times you have to do this table. Date, dividend in percentage, dividend in rupees, reinvestment NAV, dividend in units, and closing NAV. And closing NAV. Tell me the last dividend paid. Last dividend paid date. 31 3. What is the percentage? 15. Units before the dividend paid out is A. Opening units is A. The opening units is A. Before this dividend was paid, it was number of units is A. Closing units is A plus the dividend, which is equal to 21,607. Which is equal to 21,607. Is there a face value given in the question? If not given, take it as 10 rupees. So A into 10 percentage into 15. A into 10 percentage, sorry, 10 rupees, 10 rupees into 15%. Sorry. A into 10 rupees into 15 percentage. 15 percentage. 1.5A. Reinvestment NAV is how much? 45. Units allotted 1.5A by 45. 1.5A by 45. Now what does this mean? Closing rate. A plus 1.5A by 45 is equal to 21607. Is equal to 21607. A plus 1.5A by 45. 1.5A by 45 is equal to 21,607. 20,000. Now scenario doesn't end here. Again, I have to repeat the table. I'll have to repeat the table again. One more time we will do reverse working. The third scenario, I'm not doing it. I'll just do one more time. Any doubts on this? 20,000, 9, 10. Now what you will say? Opening units is A, dividend is there, closing is A plus this equal to 20,000, 9, 10. 20,000, 9, 10. Please do the other situation. I'm doing it in the screen. You do it in your notebook. You do this in your notebook. Refer screen only if you want. Reverse working, I'm giving you time to do it, and then you refer the screen after you are done. And if you're done and you feel time is there, you can do the other situation, the earlier date also. I'll not be doing it, but if you have done and you have time, do the earlier situation also. My analysis ends at this stage. A plus A by 50 is equal to 20,000, 910. 20,500. Same thing can repeat. A is the opening units, dividend percentage, dividend in rupees, reinvestment in NAV. A plus something will become 20,500, and opening, I think I remember 20,000 is the answer. The opening answer is 20,000. Any doubts on this? Any doubts on this? Clear? Can we proceed? Now, what is the use of 20,000? This will tell me my investment happened at 9 lakh 20 divided by 20,000, 46 rupees. 9 lakh 20 divided by 20,000 units, divided by 20,000 units, 46 rupees is the rate at which my investment happened. Any doubts on this? 920 divided by 20,000 units. Any doubts on the reverse working part? Any doubts on the reverse working part? Can we proceed? This is on the dividend plan. Now I'm going to do the reverse working on the the bonus plan part, which is in fact simpler than this. Any doubts here? I'll repeat what we did. We took the opening units as A, X, Y, Z, whatever you want to do. That's okay. You take that, calculate opening plus this is equal to this number, and then in the reverse working you will get the number. Then repeat for the earlier one, repeat for the earlier one. If time permits, after everything is done in the calculator, if you want to do a quick check, do it 20,000 into the dividend percentage into this. Are you getting 2,500? At least check for one period so that you understand that you have done it correctly. Else there could be errors in the reverse working part. Any doubts here? Can we proceed? Anybody has any doubts? Next, bonus plan. Date, bonus ratio, opening units, units allotted, closing. Date, bonus ratio, opening units, units allotted, and closing units. Last date, okay, before that, sorry, before this I have to get the closing units. Closing investment is equal to, closing value is equal to opening value plus return earned. Closing value is equal to opening value plus return earned. Opening value plus return earned. Opening plus return earned. How much is the investment made? And what is the return they are mentioning? Average yield 6.4% for a year. 5 years, you will earn 32% on your investment. You will earn 32 percentage on your investment. Last time, instead of giving the percentage, they gave rupee for the last situation. Here they have given the number. So 6.4 percentage into 5 years, 32% into 10 lakh, 10 lakh into 6.4% into 5 years. Closing value 1320. Closing is 1320. Please split this into closing units into closing NAV. Closing units into closing NAV. Split it into closing units into closing NAV. How much is the closing NAV? Units is 44 into 30,000. Clear? Now I go back to the table which I told you to create. Any doubts on this? 44 into 30,000. 44 into 30,000. Date. The date is, what is the last date in which bonus paid? 31. What is the ratio? Opening units A, units allotted 0.2A. Opening units A, units allotted 0.2A, 1 by 5. 1 by 5. 1.2A is equal to 30,000. 1.2A is equal to 30,000. A plus 0.2A. A plus 0.2A. 1.2A is equal to 30,000. What is the number you get for A? 20? Okay, sorry, 25. I'm not doing the other situation, okay? I'm not doing the other situation. Same thing. Now, there's only one reason I've done this question, because just to show you one more aspect. Ideally, I should not have done this problem itself, because if you just give me, just give me a minute. Okay, if you see these MCQs which are there, it will indirectly test all of this. The MCQs itself will take care of this, but only doing MCQ, then you will feel that only MCQ is being done. Why is he not doing question? So this, the two questions which I did also, I could have done it in an MCQ form, because in the MCQ I would have done only one adjustment, 1 year adjustment. In a detailed problem also, I have done only 1 year adjustment. I have done only 1 year adjustment. I did not do all the adjustment. So that is what MCQ is going to do. MCQ will ensure that you just stop at one level. If you get the clarity, you can apply it in any question. You can end up applying this in any question, which is what this question is going to do. The question which is there has the same example, and if you just do it one time, you're kind of taken care. And the format, everything is there. So from the concept book only, major chunk of discussion should happen. Ideally, I should not solve even a single problem in the session, but if I don't solve problems, some of you may not get that grip. That is why I'm forced to discuss questions. That also many times I don't discuss it fully. Some question I discuss fully, some question I put a stop at some stage. Any doubts on this? Clear? Can we proceed? Just give me a minute. Okay, there was one exam question which came on something called as the I am your fund manager, I manage your money. So you have to pay our expenses. One of the expenses, my compensation, and my compensation can depend on practically no, but can depend on what returns I'm generating. If I generate a very high return, you will give me a higher compensation, and if I generate a very low return, you will give me a lower compensation, which is what this question 10 is going to do. MF charges. XYZ plan, a hedge fund, currently has assets of rupees 40 crore. Mr. A, manager of fund, charges fee of 0.1% of the portfolio asset. What is portfolio asset? Is what money you gave me on day 0. On that, I'll charge you 0.1%. In addition, I'll charge an incentive fee of 2%. Incentive will be linked to return each year in excess of the portfolio maximum value since the inception of the fund. So I started this mutual fund from the inception, whatever was the maximum value. If I exceed that number, I'm eligible for a variable incentive. The maximum the fund achieved so far, since the inception is 42 crores. Since the inception, the fund has achieved a maximum value of 42 crores. Today, the value is 40 crore. Benchmark return to make Mr. A eligible for incentive. How much should I minimum earn so that I can get incentive? What percentage should I earn? Today it is 40 crore and maximum value has been 42 crore. How much should I earn so that I can get variable incentive? More than 42 crores. What is the percentage? 5%. From 40 crore, if you earn 5%, it is 2 crore. That is 42 minus 40 divided by 40. If you earn 5%, you will get a variable incentive. If you don't earn 5%, no variable incentive. Clear? Any doubts on this? A variable incentive is applicable if you earn 5%. Give me answer to part 2. You do your calculation. Part 2, 2 minutes for you. I earn 29%, I earn 4.5%. Think logically and then give me an answer. Part 2, give me an answer. Think about it. I'll anyway discuss. 2 minutes for you. I have modified this question in the third edition, so it will say 11 modified in the side. If you have the second edition, the numbers may not match. I have modified the problem little bit. No, tell me the incentive amount, end incentive amount. What incentive will I get? I am your fund manager. I earned 29%. I earned 4.5%. How much incentive will you give me? 29% and 4.5%. Tell me what incentive. 29% means 40 crore was there. On that 40 crore, you earned 29%. How much is that? So value has become, remove 42 from there. Remove 42 from there. On 9.6 crore, I'll get 2%. On 9.6 crore, I will get 2%. Remove the 42. In excess of 42, I'll get variable incentive. So what is the incentive for me? 9.6 crore into 2% plus 40 crore 40 crore into 0.1%. 40 crore into 0.1 is fixed amount. 40 crore into 0.1%, whether I do well or I don't do well, you have to pay me 40 crore into 0.1%. But if I do well, you have to give me extra. Extra is on in excess of 42 CR. Second situation, no extra. Only 40 crore into 0.1%. 2320 and 4 lakh rupees. 23 lakh 20 and 4 lakh rupees. Any doubts on this? I am going to be paid incentive based on my performance. If performance is good, you have to pay me extra. How much extra are you going to pay? You are going to pay me in excess of 42 CR. At what rate are you going to pay? 2%. Clear? Any doubts on this? This 11 is already done. 12 is in a regular class itself, it's homework, so you can manage it. I think ICA released one MCQ booklet. This question they have converted into a case scenario based MCQ. So just see this question. It is in the form of a case scenario based MCQ in their booklet. They have converted into a case scenario based. You'll be able to handle it. It is not very tricky. So this takes care of my first discussion on the mutual fund, where the focus is on return calculation. Second focus will now shift on NAV computation. What is NAV? Another discussion I'll have now. First focus was on return calculation, where I'll just summarize what I did till now. Technically, if I want, I can complete this entire MF chapter in 10 minutes, because when I read it this way, I explain the concept in a faster way. I can keep doing it in 10 minutes also. We understood that what is an MF? MF is basically an person who's taking money from all of you and investing on your behalf. First thing is MF return versus the individual return. MF has to earn more than the individual return. Why is that has to earn more? Because MF incurs expenses. What should it earn? MF return is equal to individual return divided by 1 minus initial expense ratio plus the annual expense ratio. Nothing for you to remember in the formula. You should not look at the screen also. In your mind, you should tell whatever I am trying to say. Then if there is an opportunity cost, I'll have to do a cost benefit analysis. What is a cost benefit analysis? Cost is fall in income. Cost is fall in income, investment income. What is the benefit? Increase in professional income. Increase in professional income. If benefit is more, do your MF investing. If benefit is less, don't do MF investing. Return is a function of what you get back minus what you give divided by what you give into 100. If you do into 12 by M, it will become annualized return. Without 12 by M, it will become holding period return. Period of holding can be reverse worked, saying that annual return is equal to 12 months, holding period return is equal to question mark. Days or months calculation. If there is an information on the date of investment, please do calculation number of days. You will see this when I do the next segment of the chapter. And if no such information is there, do computation on months basis. Dividend declared by the MF. If they pay out the dividend, apply the same concept 3 formula. If they don't pay out the dividend, closing value minus opening value. What is closing value? Closing value is equal to closing units into closing NAV. What is opening units? Opening units into opening. How do I calculate closing units? Date, units held, dividend percentage, dividend in rupees, reinvestment NAV, new units and total units. What is the bonus plan? Date, units held, bonus ratio, bonus units and total units. Two types of MF scheme are there. One is an open-ended scheme and a closed-ended scheme. Open-ended scheme, return computed using concept 3. Closed-ended scheme, listed in stock exchange, because of which the NAV1 and NAV0 will be replaced with an adjusted price. It will be replaced with an adjusted price. Taxation impact, cost of acquisition of bonus units is 0 and STT is a not tax deductible item. Effective yield, you can use the formula of 12 by M, which is not a very right formula. Second approach is to go through IRR. IRR approach, where you have an opening investment which is day 0 outflow and there is a closing value which is inflow, one positive NPV and one negative NPV. Front end load is collected extra, back end load is collected extra. Front end load adds to your outflow, so I add it to your investment price and collect it. Back end load I deduct from your inflow and give it to you. Formula is very simple: public offer price minus the NAV divided by NAV. In that question which is there in the material, you will have both front end load and back end load. In the MCQ, I had only front end load example. Clear? Any doubts on this? Okay. I take a 15 minutes break, exact 15 minutes break, nothing beyond that. I start sharp at 12:18 again. 15 minutes break.